When people first think of investing, they may think of some big and scary stock market that only adults can take part in. Yes, the stock market is part of investing, but there's way more to investing than just that, and teenagers can invest starting today. Let me break it down for you in 3 easy segments. Firstly, what is investing? It is simply the process of owning an asset with the goal of generating income from it. You can put money into something you believe will grow, and if it does, you make money. Some things you can invest in are stocks, bonds, currencies, real estate, and even collectibles such as shoes and art. Second, why should you start investing? Well, that can easily be answered. Investing is very important to our present and future financial security. A majority of Canadians live paycheck to paycheck. This means that they have no savings each month. There are a few negative consequences to this. 1. If an emergency were to occur, such as a car crash, they wouldn't be able to afford to fix their car immediately. 2. They would have nothing saved for retirement, meaning they can't afford to travel and live the life they dreamed of. And 3. While the rich are getting richer, they're also saving money. The more you have, the more you make, and the more you make, the more you have. You can start to see a feedback loop, right? Well, this is known as compound interest. Third, what can you invest in? The most popular investment for individual investors are stocks. Stocks are all the shares in which the ownership of a company is divided. If you own a single share of the stock, that means you have a small fraction of ownership of the company in proportion to the total number of shares. Stocks are an investment because people often buy them when they believe the value of a company will go up. Successful investors do a lot of research before they start investing because just as you could gain a lot of money, you can also lose a lot of money. In this course, we will be primarily focusing on stocks. Another investing vehicle are bonds, and they're kind of like contracts that promise to pay a fixed amount each time. Unlike stocks, if you buy a bond, you are not buying a fraction of ownership in a company, but rather lending the company money. Much like how when the bank loans you money, you have to pay it back. This time, you are the bank, and the company has to pay you. Bonds are a much safer investment than stocks because you are guaranteed your money even if the company goes bankrupt. The same cannot be said for stocks. For this reason, risk-averse investors may like this over stocks. Lastly, if investments like stocks or bonds are not your thing, don't worry. There are alternative investments that you can take part in. Things like real estate, commodities, various funds, collectibles, digital assets, and more are all potential investing vehicles. Many of these alternative investments have few regulations and varying level of risk. Thank you so much for listening to Lesson 1. We hope you stay tuned for Lesson 2. And if you want to get more from us, go check out Target Alpha Canada on Instagram.